In this video I'm going to show you how Navision posts to the chart of accounts when you buy an item and when you sell an item. This is the basic scenario and covers all cases except a number of exceptions. One of the exceptions is when you use the expected cost feature. This scenario is covered in the expected cost video. Another case is when you sell your items before you buy them, and this exception is covered in the selling before buying video. But before we open Navision, I will go over all the postings on two slides. The first slide will show you how the purchase is posted, and the second slide will show you how the sales is posted. Once you've understood how Navision posts when you buy and sell items, I will show you first how Navision should be set up in order to achieve this scenario, and then I'll take you through the purchasing process and go over the GL accounts and the GL postings of the purchase, and then I'll go through the sales process and show you the GL postings from the sales process. In this basic case, I'm going to show you how Navision posts when you buy an item at the cost of $10 and when you sell it afterwards at a price of $20. We have a 20% VAT. I'm going to show you this on a mini chart of accounts with all the accounts that we need to make this case. So let's start by looking at the purchase side. In this case, we are buying one item at the cost of $10. In this case, Navision will book 5 GL entries, except for a number of exceptions which I have described in other videos. So these 5 GL entries, what are they? Well, I've tried to break those up into two kinds of entries. First, you have the pink ones that are which I call purchase as cost. And if we look at those first, you have a cost entry. Let's say you buy this item at a value of $10. So Navision books this as a cost, as a purchase cost of $10. And then on top of that, there is some VAT, $2 of VAT. And the net effect is that you have to pay your creditors $12 for this particular purchase. But Navision does realize that this is not actually a cost, because it's an item which is not consumed instantly. In fact, it is put on inventory. So it's not a cost for your company, rather it is an asset for your company. And Navision corrects this with two other postings. And I have called those two postings from cost to inventory. So in order to bring the cost section back to zero, because it is not a cost, Navision pulls out this cost with a posting on another account called direct cost applied. And the counter posting for this one goes to the inventory. So the net effect of buying an item is that your cost section is 0, and in your inventory you have a total of 10, and in your creditors or your accounts payable you have 12 because of the VAT, which is 2. Okay, so what happens when you sell the item? Well, first of all, as I mentioned, we are selling the item at a price of $20, and we still have a VAT percentage of 20. So when you sell the item either from a sales order or from a sales invoice, Navision will create 5 entries, except for in a number of exceptions which I have covered in other videos. So these 5 postings can once again be broken up into 2 sets of postings. You have first what I call the sales postings, the ones marked with pink, And you could start out with looking at the sales or the revenue posting. So you've had now a sale or revenue of $20, and because this is VAT charged, you have to charge your customer for 20% VAT that you'll be able to, or that you have to pass on to the tax authorities. And as such, the debtors or your customer needs to pay you $24. So the other two, or the other part of these 5 GL entries can be called cost of goods sold. And when you sell something, it's not all good because your inventory is also reduced. So although you have made $20, you have also incurred a reduction in your inventory. So you have lost some value selling, achieving this sale of $20. So this reduction in inventory is recorded partly on your inventory account, which is decreased by $10, and the counter posting for this one is posted to your cost of goods sold down here as $10 as well. So if we look at these two transactions as a whole, we'll see the balance over here, and we should expect to receive $24 from our customer or from our debtors. Our inventory is now down to 0 because although we did put something on inventory, we had to give it away when our customer bought it. So right now our inventory is 0. We expect to have to pay our creditors or our vendors or suppliers $12, and the total of the VAT or the result of the VAT is that we have to pay a total of $2 to the tax authorities. Then we've had a sale of $20, but we've also had a cost of 10, making a profit of 10. Keep in mind that these two tens, they cancel each other out. Okay, so let's have a look at how we set up Navision before we perform the scenario. So the first thing we need to ensure is that we have the chart of accounts set up. So I'm gonna go to the chart of accounts here, and in the bottom of this chart of accounts I've made a mini chart of accounts. It's just like the one I used for the slides, and it has an assets section, a liability section, revenue and cost, and it has the same accounts. So you need to set this up before you can perform the scenario. The next thing we have to check is the inventory setup. And in the inventory setup, automatic cost posting has to be switched on. Expected cost posting has to be switched off, and yeah, it needs to be set up like this. So then we have to connect our posting groups to our new small chart of accounts down here. So we'll have a look first at general posting setup. And I've made two general posting groups here, which are the ones that I'm going to be using. So you need to set up your sales account, and it's pointing to our mini chart of accounts here. You need to set up your purchase account here, and then you need to set up your cost of goods sold and your direct cost applied here. So next we have to check the inventory posting setup. once again, I've created a special posting group for this scenario, and it's called, well, Inventory P. And it's the only account you have to set up here is the inventory account. So then we have to set up our vendor posting groups here, and I've created one vendor posting group just called vendor, and it's all we need to set up here is the payables account. So it's yeah, connected to our payables or creditors account. And finally, customer. And I've created a new customer posting group called just customer, and we need to connect that to our receivables account or debtors account here. Then I have created two. Then we have to set up our VAT posting setup, and we do that here. So I've created also two new, both a business and a product VAT posting group. Actually, I just I'm using a combination here called National and VAT 20, and the sales VAT account is connected to our VAT sales account, and the purchase VAT account is connected to our VAT purchase account. So that does it for setting up or preparing NAV. Obviously you need to create an item and a vendor and a customer that uses these posting groups. Okay, so the next thing we need to do is to I'll demonstrate now the purchase side of this scenario. So if we go purchase invoice here, we can do this, remember we can do this scenario both with purchase invoices or purchase orders. I'll do it with purchase invoices because yeah, it's easier. We don't have the ship invoice thing we have to worry about. So purchase invoice here, and new, and I've set up a vendor just called vendor, which is connected to the right posting group so that we will be posting to our mini chart of accounts. Actually, we need to put in a fictitious vendor invoice number here, otherwise it won't post. So I'll choose an item. I've created an item called glass 1, and we'll not put anything in location code because the inventory posting setup, we didn't combine it with a location. So just quantity 1, and if you recall, we want to purchase it for a cost of $10 or pounds. So that should be just about it. Let's get that posted. It's posted. So now we can have a look at the outcome of this posting. So first we can look at the posted purchase receipt. And it should be the one here in the bottom. If we double click that one, we get our posted purchase receipt here, and we can navigate on that to see which transactions are connected to this receipt. So we got a posted receipt, that's itself, and we got an item ledger. As you can notice, the receiving part doesn't have any GL accounts or financial impact because expected cost is switched off. So to find the financial impact, we have to go to the invoice. So posted purchase invoices, and we go to the bottom here, double click this one, and navigate. So we've got quite a few more things connected to the purchase invoice. We've got the purchase invoice itself. We've got 5 GL entries, which I'll just get back to. We got one VAT entry, one vendor ledger entry, value entry, detailed vendor ledger entry. But I'll focus for now on the GL entries. So if we click here, we see that just as expected and as I explained on the first slide, we have you can actually see here we have 3. Recall that I divided the 5 postings into 2 pairs. This is the first one. These 3 are the VAT, it's the cost, and it's the account payables here. So, but because we are buying an item which has inventory value, we're pulling it out of the cost section with this entry and throwing it back into the inventory with this entry. Okay, so now we need to do the sales side. So I'll do this with a sales invoice again. And we'll create a new one. I've created a customer just called customer, and once again you have to make sure that this customer is set up with the correct posting groups that posts to the mini chart of accounts. This is just a credit check, so we'll just go through this one. So now we've got our customer, and we want to sell the glass that we just purchased here. Location code blank, quantity 1, and recall that we wanted to sell it for $20, 20 pounds. So that should be it, and we can post this one. Okay, so this has created a shipment and an invoice, and we can start with the shipment. And it's in the bottom here. It's a one for glass, and if we navigate on this one, we'll see that it doesn't have any financial impact because expected cost is not switched on. So we'll go back to the posted sales invoice. And in the bottom here, we'll find our posted sales invoice. If we navigate on this one, once again we'll find all these entries, and in particular these 5 entries, the same 5 that we saw on the slide. So if I click here, you'll see the 3 entries that are the first, which posts to the cost section. We've got our VAT, we got our sale, and we got our receivables account. So, but in order to get this cost pulled out of the cost section and into the inventory, we've got these 2. This one pulling it out of the cost section, and this one putting it into inventory.